Good afternoon, one and all. How's everybody doing? We are flipping positions, actually. We are live on YouTube, I believe. So let's double check that. Make sure that's the case. And then I can chat to you guys. Oh. There we go. Make sure we're on here. There we go. Right, I see some of you in the room there. So we took a NASDAQ trade yesterday. That worked out amazingly well, obviously. And I've just flipped my positions to the upside just to see if I can grab some more downside while I am buying back. Yeah, cracking one, Fad. Really, really good. Oh, well done, Sweet. You got into it as well. Amazing, mate. Amazing. Now, I'm not saying that you should get out of it by any stretch, but I just looked at this as a potential bounce point. You can see the horizontal level here. So all I've done is I closed my my longs, sorry, my shorts down at that point, and it was a crack. I don't even know what the percentage was, to be honest. I've not really looked at that as yet, but we can work it out really quickly. I think stops were up there, weren't they? I can't even remember where we were designing stops or where we ended up getting in, but I do know that it was around about 650 pip per trade. Anyway, all I did was I closed my longs, my shorts down here, and I just pipped into a long. Now I've got no major confidence on this, but I've moved stops to break. I've already taken a bit of profit off the table as it came up, and moved stops to break even. Quite liked the price where I got in at. I got in very, very close to the low down here. So I'm just going to see if this one can run. Now I still think the Nasdaq's got. Oh, sure, mate. Yeah, I will do that. Calculate the profit. Yep, absolutely. Yeah, now I still think this is going down, but I'm just wondering whether I can play a bounce. If I can play a bounce back up to this level, then I'll get a free trade to the downside. So I've just bought in down here. Now this might just shut me out, as soon as it starts. But my reason for doing it, we talked a little bit yesterday about what could potentially change things around. And maybe even make things worse for the likes of the Nasdaq and possibly global equities generally. And that's the Fed on Thursday. So I'm still in the FTSE long. I'm still in a Ethereum long as well, and I've got various other items on another platform which I've invested as well as not invested. Sorry, I've bought stocks as well as traded the FTSE and everything else. So I'm just looking to see whether we can get a bit of a bounce here. And if we can get a bounce, then I'll move to the downside. Now, let's see where we got in, and we'll work out percentages. Can you guys remember the prices we got in at? It was somewhere up here, wasn't it? No, 2 trades up here, and I think there was a stop up there. So it's ended up being around about 4-1, but 12,168. 12,168. That was the first one, wasn't it? Well, there was another one. We got 2 on because I took it on the fib as well. 12,168. Let me just work out the fib. Oh, and here as well. 12,231. Oh, you got into one. Okay, mate, no problem. You got into one. It was around about there. 12,230, something like that. So 68, so 70, let's call it 60 pips. So we're midway between the two. It was about, so it would have worked out to be around about 12,200. That was the aggregate of the two, and we put stops at the highs there, didn't we? So it's actually a 3-1. When you say the percentage, do you mean percentage in regards to the risk? Because the risk on this trade was around about, I think it was about 150 pips to the upside. Maybe let's say 180 to the upside, and it was 600 to the downside. So if you mean the risk from top to bottom, is that what you mean? from where the stop is and where you enter to the stop? What's the risk on the trade? Is that what you mean by percentage, or do you mean how we calculating how much then? Oh, okay, to update on the journal. Yeah, so it is that. It is that. So but the way that we'd update the journal is the aggregate entry price in this example. So it would have been around about 12,200. And then we're working out how many pips to the upside the stop loss is. And I mean, let's call it 200 just to make it easy, just to make the calculations easier. It was better than that, but let's just go with that just to make the calculations easy. So if I entered at 12,200 and my stop loss was at let's say 12,400, somewhere around there, then all I'm doing to start with is let's do it this way: stop loss at 12,400. Now, because it's higher, the stop loss goes on top of the equation, and it's minus the 12,200. So that's going to equal 200. Okay. So far, so good. So so that's 200 pips. So my risk was 200 pips. Now we got 600 plus out of it, and I'm being conservative with the numbers here. So it was obviously a better value than this, but we got 600 plus out of it. So it's I've come out down here, so it's around about 600. Even if you come out around here, I don't know where I said to you those come out, but that's 622 pips to the downside. But let's call it 600 to the downside. So the reward is 600. The reward is 600. And then you're just going to do an equation on it. What's 200 as a percentage of 600? Sorry, no. How many times, effectively? How many times does 200 go into 600? And it goes in 3 times. So if you were to put 200 times 3, that would equal 600. So that means we got a 3-to-1 trade. And then it's just about how much you put on. I mean, I don't know how much you put on per trade, but let's say you put on 1%. That means you got 3%. So your profit would be 3%. Is that what you mean, Fad, or is it not really that? Or do you need me to go through that one more time? Yeah, pretty much. Okay. So then it's just down to, so if it's a 3-to-1, if it's a 3-to-1, then you're working out how much in monetary value. What did you risk? Did you risk 0.5%? Because if your risk was 0.5%, then you actually got 1.5% out of the trade. And mine was different because mine was a hedge. So I was able to put on a full whack on it and hedge out some of the risk for downside with the FTSE. But for you, it's just a straight up trade. So whatever you risk, and I would encourage you to always risk the same when you have the setup that you like. So you can do it in you can do it in different grades. Now, if I say from my first entry, which was 68 down there, to the stop is 68. Well, let's call it 230 pips. So if I'm going to be entering at 1%, then I'm effectively saying that if I've got what would make it easy, $10,000. So if I've got a $10,000 account, then 1% of that is $100. So as always, I'm going to effectively divide 100 by 230 to tell me how much I'm putting on. Because, sorry, let me do that again. I've got an account of 10,000. Now I want to put on 1% in total, but I can't do that. If if I'm putting on two trades, I'm not going to put 1% on there and 1% on there. What it does mean is that the one at the top is better this way. So if I'm scaling in the way that I do it, then if I'm going to risk $50, so I'm going to risk in 0.5% of the account. So if I've got $50, which is 0.5% of the account, so I'm going to risk $50. So I'm going to do 50 divided by the 230 to tell me what my pip value is. How much am I putting on each one? Now, every single instrument has got a different. I'm just going to put that in a calculator. Every single instrument is got a different valuation because of the exchange rates, so it won't be one for one. You're not kind of like talking one for one. So this tells me that I'm risking 0.2. Now that should be lots, mini lots, but it doesn't work out that way because you have to work out what the amount per pip is going to cost you in relation to your account. So no, I'm only going to risk $50. If I'm going to risk $50 on the first one, I've got to basically take my $50 and divide it by 230 pips, telling me how much I've got to put on per pip, and it works out at 0.217. But when it goes up, I can actually risk a little bit more because now I've got to divide 50 into 170 because the stop loss is a bit closer as I scale in. So 50 divided by 170 gives me 0.29. So in the first one, effectively, I've got maybe what would it end up at? What, 21 cents? Yeah, it's about 21 cents per pip. But the second one, I can do 29 cents per pip, and that in total, when I times this, both of them by 200, it should. No, by. Yep, so by 200, that's right. That means the first one has a value of 58 cents a pip, and the second one will have a value of what would be 42 cents a pip. Sorry, the first one's a value of $58 for the trade. The second one's going to cost me $42 a trade. So for the trade, so it's aggregated over over the 1%. I don't know if I'm making any sense whatsoever, but the thing is, I don't have quite a hassle. Yes, it is. Yes, it is. But you know what? It is a hassle, I have to say, Fad. And if you've got Trade Manager, it's probably a lot easier. But what I have to do is if I'm going to enter at let's say the 1168 or whatever, let's say I'm going to enter here. This is where it's a hassle for me. But if you're pre-prepared, if you know you're going to take this trade, then the maths it takes a little while. But let's see how long it takes. Okay, so we'll start now. It's 1:30. So I'm entering here. I've got a stop loss up here. Now, what I have to do, if that's going to cost me $50, I've effectively got to open up my NASDAQ, and I've got to say, give me a sell limit at this price here at 12,168. And give me a stop loss at 12,368. And then you can see that trades in the market. Now, there's probably an easier way to do this. Where's my stop loss? Can I modify this? Oh, I did that wrong. Let's do that again. So it's a sell limit, and I'm putting in 12,168 with a stop loss of 12,368. Right, so I don't know how much that's costing me right now. I put in 0.5, 0.5. So now I have to grab my Alt. I hit Alt key and left click on the mouse, and it just tells me how far away it is. That's 100. That's going to cost me $100 to make that trade. Now I only want to risk 50, so so I know that I need to take it down from 0.5 down to 0.25. Now to work out the next one, I need to go. I'm going to go in at 230 there, but my stop loss is going to be the same. 6.8. 6.8. That cost me 67 if I put on 0.5. So I know that I can go up by around about another third, you know, so I'd have to kind of go 5 divided by 3, and it gives me 1.6. So I can probably go in at 0.7 on the next one, or more accurately 0.66. Now that took 2.5 minutes. And you know, I have to say, it doesn't seem like a long time, but it's laborious. It is a pain. It is a bit of a pain. But that's the benefit of scaling in, is that you get you can put more on at the higher point, and that's really where you want more on. So so you know, I'd encourage you to you know, try and do the scale in, because I just think it's a better way to do it. And what I'm saying when I'm scaling in is, I think I've got the right price, but I can't be sure. And rather than putting all my faith in the fact that I've got the right price, what I'm saying is I'm going to trust that I've got the right area, but that area is fairly wide. So what I'm always trying to do, and I was a little bit low yesterday, and the only reason I took it where I did is because of the fib, and I should have waited for the initial price that I said I was going to put it in, which is about another 12 pips higher. But what I knew was that this was the area that I wanted to get in. Now you can, if you want, you can split it into 3 parts. You can split it into as many parts on the scaling as you want, as long as the total is only going to cost you the 1%. So if we say that this here is our was our sell zone. If I go in at the lower end, then I might be able to just get a little bit more out of it at the top. So that's why I start at the lower end of the sell zone and scale in at the higher end of the sell zone for the second position. And if it turns from this point, then the chances are it's going to turn and come back, and you might be able to add the second position straight away there. So so that's the benefit of it. And I have to say, one thing that that has served me the best in trading is not a particular setup, but it's a way to manage the money. That's the thing that served me the best, managing the money in a certain way, and trying to get the most. Hey LT, how you doing there? Yeah, trying to get the most out of the move, and the price. So I'm always trying to find the best price, and you know, my a friend of mine, he's always just saying to me, just get in. If you know, you know, if you've got a pretty sure idea of what you want to do and where you want it to go, just get in. And I do get that philosophy, but it just doesn't work for me. I'm you know, I'm always on the hunt for the best possible chance I can. Rolls Royce is a really good example. So he's in Rolls Royce today, and he is up 13%. Now I can't justify that. I can't justify getting into Rolls Royce. And let me see if I can bring it on TradingView. Let's see if they give us Rolls Royce. And the reason that that I will wait Well, it's twofold, really. But one of the reasons I'll wait is that I'm not married to Rolls-Royce. You know, I want Rolls-Royce to work out, and I want it to be the one that I get into. But ultimately, if it doesn't give me what I need, then I'll just go somewhere else and see if I can get the value somewhere else. So this is Rolls-Royce. Now, my price point to get in to Rolls-Royce is here, is along this horizontal level. You know, that's where I'm really interested at 85. And I think that's a really good price. And if Rolls-Royce doesn't come back to that position, then I won't bother. You know, I'll look for something else. And the reason I like doing this, yeah, well, yeah, you know, it can all be done wrong. That's the thing. You know, everything that we do can always be done wrong. Um, but the reason that I do it this way is I did say it was twofold. What was the other reason? Oh yeah, the second reason that I like to do it this way is that I'm quite defensive in many respects. It looks like I'm being aggressive, you know, when I'm trying to sell on the, you know, because what I was doing with the Nasdaq, I was selling as it was coming up. I wasn't really waiting for a chart, a bar, to say that's where. You know, the indication is that prices turn. Now I can get in on the bar. I don't really do it that way because I like this price. Because and the reason that I do it this way is that if I get in here, and it feels counterintuitive for most traders, and it took me a while to kind of get my head into it. But if I can get in here, what I'm looking for is an inverted head and shoulders to start with. So I've got my, you know, and you know, if the analysis tells me if the inverted head and shoulders is going to work out, it's probably going to work out around there. Now, if I get in here and price does that, I know I'm wrong. And all we're ever trying to do with the stop loss is understand that we're wrong. Now, the chances of this coming back and testing this area are quite high. So it means that if it breaks down below and comes back, I can get out at the same price I got in at. My issue when you don't pick a price, but when I don't pick a price point and just get in, let's say, is that if I'd done what he'd suggested, which was just to get in today, then yes, I would have made. I'd be up by 13% right now. But let's change it to an hourly. There's the 10th there. Yeah, so he got in straight away down here. And I did say to him, I thought it was a fair chance that he's managed to pick a decent price, but that's just not my price. Now, if I'd got in down here and it comes all the way down to here before bouncing, then I'm giving up quite a lot, and from 100 down to 85 is 15%. So yes, I could make my, I could be up by 13% right now, but I could be down 15% even before I've got the second one that I wanted to get in. I'll be entering again here, but now I'm down 15%. So even before I'm making money, I've got to come back a bit. So I prefer to say, right, where's my buy zone? And it's somewhere in here. I don't mind entering a little bit, before the price point if I see a turn here, but I'd prefer to get my price point if I can. So I'm much more interested in trading price than I am patterns. It's just the way I do things. Now that's the same with Ethereum and things like that, which I'm looking to add to these positions now. So Ethereum has now taken off to the upside, which is fantastic. Ether. Where is it? There it is. Yeah, Ethereum's taken off the upside, which is fantastic. Now I want to add to this. So I'm in at the lows down here. So I want to add to this, which means I've got to sit through. Now, the only reason I'll sit through this, because what I could do is what I've done with the Nasdaq and close up here because I'm anticipating a move back in the direction of where I got in again. I am expecting that to happen, and that means giving up this profit. And what I could do is close both positions here and add in effectively 2 here. and I'm not against that, you know, on occasion. But I think with Ethereum, I think that there's a chance this goes much higher, and it might go without me. So that's why I'm leaving it in this particular scenario. I'm leaving this this on the table now with, and that's half the reason that is because I don't really understand how Ethereum moves or why it moves really. With the Nasdaq, I've got a little bit of a different view. My view on the Nasdaq, you know, I understand indices a lot better than I understand cryptocurrencies, and my view on the Nasdaq is that on Thursday, I don't think there's anything really major today, but we could, you just don't know, you know. So one of these guys might say something which is quite negative, and the uncertainty that I think that we might have for the next couple of days, bank holiday in on November the 11th in the United States as well. But this is what's concerning me, is the Fed Chair Powell speaking. Now I wonder whether that might be the next move down. Could happen if the chair comes out and says, you know, we don't now need as much stimulus as we thought with a vaccine. Then maybe things could change very quickly next year. But we don't know. So because we don't know, what I'm trading with the Nasdaq is the uncertainty. And the uncertainty, I'm looking to bring me back up to, you know, this level here, possibly, maybe even a little bit higher. I mean, this will, if this is an inverted head and sorry, if this is a head and shoulders pattern now, what we're looking at is a line going from here to here, and there to there. So there might not be a lot of room actually. Might only be trading the Nasdaq to 1173, and I'll short it here. This is where the short for me is going to come in, and then I'll see if I can get taken out to the lows and go. But I really want this to happen on Thursday. I don't really want it to happen now. But if it does, it doesn't matter because I've got protection now, so I can get in a short here. And if it keeps going up, I don't need to scale in, because if it starts changing the trend, I'll just close both positions. Um, but what was my point on that? Oh yeah, the point was that I'm waiting till Thursday. I wonder whether the next catalyst, you remember we were talking yesterday, if we can find the reason why we're trading something, and even go down to the micro with that, then we can start, you know, getting a bit more confidence about holding on to things or getting better entries and things like that. So my view right now is that there could be just a little bit of relief in the opposite direction while we wait for Fed Chair Powell. But after that's done, I think we resume trend again. And what that's going to do for me with the FTSE is potentially give me another buying opportunity. With Ethereum, it gives me a potential buying opportunity. So I'm looking for a move back down now anyway. But I'm going to hold my positions with the likes of the FTSE and Ethereum, because I really like the initial price. The Nasdaq's always a bit concerning anyway. Yeah, I closed yesterday's trade at the lows. I closed down and I flip positions. But you don't have to do that. It's just that, you know, this is just a different way that I do, another way that I do things. So I've got probably 2 or 3 different techniques the way that I will manage the money. The first technique I'm doing with the FTSE. I'm not closing positions with the FTSE. I'm not closing positions with EasyJet or Aston Martin or Ethereum or Cardano. I'm not closing those and trying to go in the opposite direction, mainly because there'd be too many for me to manage. I can do that with something else. I could do that with one of them, and I've chosen the Nasdaq because the Nasdaq did get a big move to the downside yesterday. But I was looking at this area and thinking this could bounce here. Now, was it you, Fad, that was in gold? Was it you in gold? Yeah. Okay. So with gold still in, brilliant. And you know, gold. Let's use gold as an example of this particular technique. So with gold, you picked out 1856, and you were right. You know, you were right on the money. That was a brilliant price. So you can do one of two things at this point. There's the test level, which it might have done. I don't know. It we might not come back again. I don't know about gold. Maybe it's tested already. You can do one of two things at this point. You can leave your short in the on the market and buy at the low, and just see if you can trade a bounce. So if it's a bit of a bounce, you're completely free when you're short up here. And it comes down, you can buy at a really a ridiculous point, forgetting any setup because you think it might bounce there. Now gold from that particular point, from the 56 level, has come up so far about $18, and I don't know what that'd be, but I don't know how much you've got on per pip. But if it's bounced $18, let's say you put on a dollar a pip, then you could have made that $18, been out, and you've still got your short on the table. Now, the other thing you could do, which I'm doing with the NASDAQ, is you can close your short. You can buy down here. But this is a bit more aggressive because you've got to be pretty confident it's going to bounce. You can buy down here, get stops at break even as soon as it bounces because it's likely to bounce. It should bounce. So if it bounces, then you get your stops at break even. Then if you're wrong, you just have to accept that you didn't get the move back to the upside, and you could miss out on a big move. So there are difficulties with it any way you do this. So there's effectively there's so many different ways to manage your money. You just sell it and you hold it, see how far you can get, trading the stop loss. You can sell it, you can buy it here. When it comes back up again, you close the buy and you've still got your sell in the market, and you've just made some money on the buy. So it's free money, really. It's a free risk free. Or you can sell it, you can close, you can buy, and then you can sell it while the buy is still on the table. So I can buy down here, and this is the technique I'm using with the NASDAQ, is that I've closed it down at the low and I've bought. So I bought down here. And if it comes up, I will just sell it there, let's say. Now, this isn't the NASDAQ, but we're using gold as an example. So I've bought there. So I've closed my sell, closed my shorts, closed the shorts. Bought at the low. And then I will sell here. Keeping the long open. Now, then you've got to do further options. So it's a little bit like a spider graph in a way. You got further options that you can do when you sell here. I've got a long here, and I've got a short here. Now, option one. Oh, hold on a minute. How late are we here? Oh, we're over. Okay. Tell you what. Let's continue this in the room. I apologize for everybody that's there. If you want to pick this up tomorrow or Thursday, actually, I'll be back. Then I'm more than happy to do that. But I don't want to go over time because Mai is in with us right now, and she probably needs to go. So LT, I'll pick this up. Remind me on Thursday, and I'll pick this up for you on Thursday. I know you're not in the room, so I'll pick this up for you on Thursday. But we do probably need to push off into the main room, and we've got Shukri as well, and I'm already late for him, so better get going. Apologies to Mai and to everybody else when we start this conversation. I'll pick it up Thursday. Thanks again, as always, for tuning in, and I'll see you in a couple of days. Okay.